Hello and welcome to BloombergQuint. Escorts reported numbers that were higher than the analyst estimates. Change in product mix and lower cost led to margin expansion for the company. But let's discuss the quarter gone by with Bharat Madan, the group financial controller at Escorts. Thank you so much, Mr. Madan, for speaking to BloombergQuint. First of all, margins have expanded significantly. In fact, they're at close to a decade high that has come in. How did you manage to get the margins up, and pretty much will the margins now stabilize at these levels?
Well, I think all three segments in which you are operating have done well. I think on tractor side too, the margin expansion happened. I think with the good volumes coming in with the operating leverage and the softening commodity prices. And same thing in construction too, we're seeing good cost initiatives playing out there. And obviously we took some price increases there, so it's part of the volume going down in construction equipment space. We still managed to improve the margin there. And railway continues to do well for us. So we are on a larger base, we are a better margin base. So I think all three sectors continue to do this overall margin growth that the company saw in last quarter.
What's the situation what's the on-ground situation in terms of rural recovery? Over the past few quarters, there has been general weakness. Are you seeing any kind of improvement coming in there?
Yes, I think if you look at the trend also in the last 3 quarters, we've seen the degrowth has been slowing down. I mean, we started 15% degrowth in first quarter in April to June and then went down to 10%. Last quarter was 6% degrowth, and this quarter we expect to be some small single-digit positive growth maybe the industry will see. And next year definitely we are bullish and we expect it will again be a single-digit growth which will come in FY21. And maybe FY22 can really be again the peak year for the industry.
What about inventory at this point of time? What's the inventory level that you're left with, and is the inventory getting cleared at a brisk pace?
See, if you look at the inventory value, we are one of the I think players who have very low levels of inventory with the channel partner today. It's only within 3 to 4 weeks as of now. So that's again I think coming on the back of a very improving market share. I think it's a very positive sign for as far as the market and dealers are concerned.
What's your view on pricing power in such a weak environment? Are you getting pricing power, or is that something that probably will take a few more quarters to come in?
Well, I think company has been holding on to prices, and we also pass on whatever cost increases have happened. And so in the question of maybe a few months here and there, so it happens only with a lag. So I think in the last few quarters we have seen the commodity price softening, so we didn't see really a need to increase prices in the market. But I think as now we see the steel prices moving up, maybe, and only we get the impact from Q1, especially on the tractor industry side. So from Q1 we may see some pressure coming in. I'm sure I think the industry will take the call and will go as the industry plays out and try to pass it on to the market.
Apart from tractors, what's your what's happened with the other businesses? What kind of traction are you seeing, especially even on the export side?
I think export overall, if you look at YT in the last 9 months has done well. I think we improved the margin from almost 2.9% last year to 4.5% this year. And we expect I think a full year basis, again, exports will show about 30-35% sort of growth over last year. Though we have still got a very small base, so that's a percentage maybe misleading. But I think the numbers are improving. I think partnership with Kubota now, we expect the numbers should actually start looking up in the next 2 to 3 years. And I think our aspiration of getting 8 to 10,000 tractors export in the next 2 to 3 years looks like should be possible now.
And finally, what's your what outlook can you share for the fourth quarter and FY21? How are you seeing the financials shape out?
So we think Q4 will continue the momentum what we've seen in Q3, and probably the industry will at least slightly recover. So we expect good volumes to play out in Q4 with a similar or maybe slightly better margins. So we will be able to see in Q4, and I mean the same story should continue in FY21 too.
Okay, Mr. Madan, we leave it at that. Thank you so much for speaking to BloombergQuint, and all the best for the quarters going ahead.
Thank you.